Hey, Eric Payne here. Yeah, I want to go over this financial recast worksheet with you. You're going to see this in the data room and or the business summary, and it describes up here what we're trying to accomplish. What would one full-time working owner generate in total adjusted net profit if they were to buy and run this business? And the reason why that's important is because some businesses are fully absentee. Some have multiple working owners. Some owners take a W-2 salary. Some just take draws and distributions from profit. So, as an industry, business broker world, we want to make sure that when we go look at sold market comparables and industry rules of thumb, that we're all speaking the same language. And this is it, one full-time working owner. There's a lot of terms for it: adjusted net profit, seller's discretionary earnings, owner's discretionary cash flow, modified EBITDA. It's all basically the same thing. And this is actually a good example for that. There are two working owners in this business. And so we found for instance, in their tax return here, compensation of officers, 71,115. That was for 2024 here. So because there's two working owners, we have to um, put back in a new expense for one of the owners so that, again, we could get to solving for one full-time working owner. So with that, if we can find it, we can use it in the tax returns and or the P&Ls. This particular one, we were able to review a trailing 12-month P&Ls, basically the last 12 months of the business, and then also a year-to-date, January through April of this year. So we have both for comparison. Sometimes we get both, sometimes we don't. But if we get them both, then we'll review them side by side. In the interims, we just divide by however many months and then multiply by 12, and that annualizes the number. So that puts the blue columns all looking at full 12-month terms, whereas the gray one is an interim. So up here is your revenue, then salary info if they took a salary. Then if we can find interest, depreciation, amortization. Sometimes meals and entertainment are personal discretionary. Sometimes they're legitimate business expenses. Sometimes auto, sometimes travel. So we have to ask the seller, hey, is this a legitimate business expense, or is this personal discretionary or a one-time non-recurring expense? Maybe they had to put in a new HVAC system on the roof, and that was last year, but that's not going to happen again for another 10 years, 20 years. So that would be a good example of that. So, and then auto, again, based on the industry, if it's a restaurant, then we can assume, unless they have deliveries, we can assume that all auto, for instance, would be personal discretionary. So again, we have to ask the seller about all these to make sure that they truly are personal discretionary or one-time non-recurring expenses. So anyway, we add up the salary, we add up the personal discretion, and this could be further. This could be build a deck on the back of your house and you run it through the business, or trips to Cancun, or new Mercedes, or whatever that is. If we can find it, we can use it. And then you add all that up, you add that to the bottom line down here, and then this gets you your adjusted net profit. Again, seller's discretionary earnings and all those other terms. That's what this is. And then we put a multiple of earnings on that based on industry rules of thumb and sold market comparables, and then that's the number, the asking price. So, and again, if we're finding all of these numbers here. On the tax return, you would see compensation of officers, interest, charity, depreciation, pension profit sharing would be another one we would see. You add, and each tax return is different, whether it's an S corp or LLC or sole proprietorship or whatever, but they end up all kind of looking and feeling the same. So here's your taxable income here. Sorry, 23,670. That's what we see here. So hope that helps. Same with the P&L. If we can find it here, here's interest, for instance, meals, entertainment, for instance. You add all that up, you add it to the bottom line, net profit down here, and that's the adjusted net. So, okay, hope that helps. Let us know if you have any questions. All right, thank you much.